All right, we're back. All right, please welcome yourself, our guests. Like to welcome our guests, our traders, our recruits. Been looking forward to this all week. Dr. Andrew Menaker. Well, Dr. Andrew Menaker has a PhD in clinical psychology. He's worked with large bank traders, hedge funds, and other professional traders since 1995. He's also an active trader himself. His approach to trading psychology is unique, realistic, and performance-oriented. As a result, his services are highly sought after. Dr. Menaker currently serves as a consultant and coach to hedge fund managers with a cumulative $16 billion in assets under management. Ladies and gentlemen, would you please welcome Dr. Andrew Menaker. Hello, Doctor.
Hello, Eddie. How's everyone doing today? I haven't seen you guys in a couple of weeks, or haven't been here in a couple of weeks, I should say. It's good to be back.
It's good to have you, sir.
Good, good. And today's topic is kind of a doozy, I think. The topic is dealing with discomfort. And for those of you who can see the slide that I have up, it's a picture of a person with their head
real quick,
in the
Doctor.
sand.
We're gonna put that link in the room. It should be coming up here very shortly. But what wasn't mentioned is we will be having a visual with the doctor, so I'm going to post those in each of the rooms. All right, Doctor.
Great, thank you, Eddie. Yeah, I don't always have a visual, but I do have some visuals today. And I chose this particular visual as the first one, a man on the beach with his head in the sand, because I think in many ways it really speaks to what we face in trading, and that is we know that there's going to be discomfort, but we generally don't have a plan or a way to deal with it. And what I mean by discomfort, let me just talk about it for a little bit in the sense that discomfort comes in so many different ways. I mean, obviously the easy ones are taking a loss, right? No one likes that. That's the easy one. But missing out, feeling like we're missing out, missing a fill on a move that we wanted to be on, not being able to pull the trigger. Those are also forms of discomfort. Waiting for your level to come in before you get on the trade. The boredom, the waiting, the impatience, that's uncomfortable. And then another one that's really interesting, a lot of people really don't talk about it too openly, but it's the idea that even being in a winning trade is uncomfortable. Because what do you do with a winning trade? You know, losing trade, you kind of know where you stand. You know you should get out of it. Maybe you don't, but you know you should. With a winning trade, it's more difficult. There's actually more discomfort in a winning trade because it's not at the target yet, and you're hoping it gets there. So do you take your profit now? Do you get out? Or do you, hold it, hoping it does go all the way? So a winning trade, there's inherent discomfort. What happens in trading? What happens for a discretionary trader? The reason why there's so much discomfort is because we're never going to be perfect. We can still make a lot of money. Even if you make a lot of money and do really well, you're going to be far from being perfect. It's very rare that you're going to be in trades that move instantly from your entry without any heat and directly go to your target and stop and go back the other way. That's pretty rare. So there's always going to feel like there's something less than perfect that we've done. And so there's always going to be some discomfort. There's always uncertainty. We don't know whether we should get in, whether we should stay in, whether we should get out. So there's so many ways and so many reasons to have discomfort in trading. I just talked about some of them, but those are obviously some of the more common ones. Another one, which is not often spoken about, which is, I'll just refer to it briefly here. I don't want to spend too much time on it, but that is that even if you're making money in trading, very often what can happen is you can begin to feel as though you're not being fulfilled enough. In other words, even when you're making money in trading, a lot of people will start to feel like it's not enough, and they still feel kind of empty inside, and they want more, and that they end up pushing it. So that happens a lot as well. And so what happens in trading is how you deal with the various forms of discomfort. How you deal with that pretty much defines you as a trader. And the issue is that discomfort will activate any dormant unconscious issues that you may have. That tick-by-tick movement in price, especially when it's ticking against you, or if it's ticking for you but you never got on the trade, ticking in the direction you wanted it to go, you expected it to go in and you're not on it, watching that tick-by-tick movement, each tick has the potential of activating, triggering some type of issue for you, and for me, for all of us in trading. And this is what happens, and it happens on a regular basis, day in and day out. And so the discomfort is inevitable, and it's the traders who have learned to tolerate it more are the traders who are going to have a better chance of succeeding at this game. Now, one thing I didn't mention, I talked about, winning can be difficult. Managing a winning trade can be difficult. I talked about the obvious difficulty of being in a losing trade. Talked about those things, but there's one other form of discomfort also I just wanted to briefly talk about before I get into what we're going to do about discomfort. One other form of discomfort that people don't talk about, but it's very apparent, it's there all the time, it's just not spoken about. And that's, I guess the best word to describe it would be regret. Regret meaning that, feeling as though what you did, you recognize what you did was bad or was wrong, and then you beat yourself up for it. And that is a very powerful experience, and it brings a lot of discomfort for us. And it basically, it's a big impact on our trading. And I think what I'll do probably in the future in another market therapy is really talk about dealing with regret, because that's really its own issue in many ways. It's a big topic. So for today, what I wanted to do is spend more time on discomfort and actually dealing with discomfort. And I'm going to advance the slide now for those of you who are watching. I'm moving on to the next slide. And so on this slide, for those of you who can't see it, it's basically I've got a couple of pieces of advice on the slide. And the advice is really not necessarily coming from me. I'm just referring to common advice that we hear in trading. And the first piece of common advice that we often hear in trading is to, quote, plan the trade and trade the plan, unquote. And, it's very well-intentioned advice. The people who say this, I think they mean well. And I don't really have an issue with their intention at all. But what I do see, I see a problem with this advice, plan the trade and trade the plan. And what I see is that there's something missing with it. And what's missing is that there's an entirely different set of skills involved in developing your plan. In other words, the plan the trade and trade the plan are two different things. The first part, plan the trade, requires your intellect, it requires logic, it requires analysis. It's, that's a thinking activity, planning the trade. Developing the plan is very intellectually oriented. That's one type of skill set. But the second part of the advice, the trade the plan, after you plan the trade, to actually trade it, the execution of your plan, that requires an entirely different set of skills. And one of the skills that it really requires, the execution of your plan, is the ability to tolerate discomfort. Because as we all know, very often, those really nice trades that turn out to be, great trades are often the ones that make us the most uncomfortable upon entry. So the trade the plan part, the plan the trade and trade the plan, the execution part of the advice really, really depends upon how well you can tolerate discomfort. Now, the other piece of advice that I have written on the slide is the other one that we hear often in trading, which is, quote, pardon me, only take high probability setups, unquote. Again, nothing wrong with that advice. I certainly can't argue with it. one bit. It makes perfect sense. The problem is that it's similar to previously with Plan the Trade and Trade the Plan. There's different skill sets involved in identifying a high probability situation versus the skills that are required to actually take advantage of a high probability situation, to actually execute, to take action in a high probability, in response to a high probability set of circumstances. Again, taking the action requires a whole different set of skills than to analyze or to think or to plan ahead of time about what you might do. Two different things. And what happens is most traders spend a majority of their efforts, majority of their time, a majority of their energy really working on the first half of the advice, the first half of planning the trade or identifying high probability circumstances. And then when it comes time to kind of where the rubber meets the road, in the heat of battle, if you will, when it comes time to execute, to take action, there, unfortunately, for most traders, there hasn't been much development in terms of the skills required to execute. And again, one of those skills, a big skill, is the ability to tolerate discomfort. And that's why I wanted to talk about this topic today, because it's a really important topic. So the advice of plan the trade and trade the plan, good advice, but it's missing something. And just like the advice of only take high probability setups, it's good advice, but it's missing something. And again, what it's missing is that the advice really should be about tolerating discomfort, how to tolerate discomfort. And what I'm going to do is move us into the third slide, the third and final slide for today. And for those of you who can't see the slide, it's a picture of a golf ball a couple inches away from falling into a hole on the green, and there's a quote that says, it's a quote by a famous professional golfer, Chichi Rodriguez, and the quote is, "I never prayed that I would make a putt. I prayed that I would react well if I missed." And I think this slide in many ways is a nice, sort of illustrates some points that I wanted to make with regard to our discomfort, and our emotions themselves are actually not the problem, in that the anxiety, the fear, the anger, whatever it is, doesn't really make us money or lose us money. It's our reaction to the emotion. It's how we behave. It's what we do with the experience that either makes us money or loses us money. And again, it's that action that we choose in response to the discomfort is the problem, is the issue. You know, again, anxiety or fear does not make or lose money in and of itself. It's how we respond to the anxiety and the fear or the anger, whatever, frustration, whatever the feeling may be. So what happens is that we act out our discomfort, the feelings that we have, the discomfort, the impatience, the frustration, whatever it is, whatever form the discomfort is taking. If you don't understand why you're uncomfortable, and understand that this discomfort probably follows a pattern that you've fallen into before, if you lack the self-awareness of that, what will happen is it's a much greater likelihood that you're going to act out the discomfort, the frustration, the anger, the fear, the anxiety, whatever it is that you're experiencing for the discomfort will get expressed in your behavior. So it could manifest for one trader as hesitating when they should be doing something. It could manifest in someone else as being overly active, being overly aggressive when they should be sitting back, holding on to the trade, or not getting in because it's not a real edge. So the acting out of the discomfort gets expressed in a myriad of different ways depending upon the trader and the circumstances. And so the solution to this, what we have to do is there's a lot of different things we can do, but the one that I want people to really consider is that if we can begin to use that discomfort, the emotion, the feelings, whatever it is that's kind of bothering us, to actually use it as a source of information about ourselves and about the market and about how we are interacting with the market. Now that's an entirely different approach than what you probably typically hear in trading psychology, which is to kind of get rid of the discomfort or to control the discomfort or to minimize the discomfort or to pretend that you're not uncomfortable. I'm saying that you can actually learn to use the discomfort, learn to use the feelings involved in the discomfort as information. And I will tell you that there's a lot of very good traders who've been doing this on their own without realizing it. And there's other traders who are really good who've kind of learned how to do this. But this is actually an interesting way to trade and to look at the market, and it's a very different approach than trying to tell yourself that you're not uncomfortable, or to try and convince yourself that you're doing fine when you're experiencing something other than that. There's a lot of valuable information in our feelings and our emotions, and when you begin to understand what you're feeling and why you're feeling it, and when you begin to see the patterns involved in your feelings and how those patterns match up with rhythms and patterns in the market, you can begin to, you can begin to predict what you're going to feel before you feel it. And when you start to get good at that, you can begin to start to see patterns in the market differently than you saw them before. And you can perhaps begin to, I'm not going to say necessarily predict, but you can anticipate the market a little bit better when you can anticipate yourself. When you can predict yourself, you can start to predict the market. There's a nice correlation between the two. And so what happens is, in trading, people work on a plan. The problem is that the plan needs to include how you're going to deal with discomfort. And I would just say that if you can redirect some of your attention while you're trading and include in your trading plan something about being able to identify your discomfort, being honest with yourself while you identifying it, identify it in a detailed fashion if you can. Try and understand why you're uncomfortable. Try and understand, any pattern involved in the discomfort. Does it look like another type of experience or uncomfortableness that you've had before in trading? Chances are yes. And when you begin to see the patterns, you want to basically really pay attention to those patterns, because then you can start to see for yourself that you're going to be falling down into the same groove that you've fallen into before, and hopefully you'll be able to see it a little bit sooner. And not only see it sooner, but you can begin to catch yourself and choose a different path. But that's all going to come about with some self-awareness, learning how to identify your feelings, learning to kind of honestly analyze your feelings without trying to, convince yourself that you don't feel that way, or deny that you're feeling that way, but really actually understand why you're feeling that way. It's a huge advantage. It's a big source of edge psychologically. And I just want to say that if people would do that more, if traders were to spend, were to redirect some of their attention, some of their focus towards understanding their own internal patterns, as much as, if they were to do that half as much or even a fourth as much as they're trying to understand patterns that they see on the screen, that would change so many people's trading right there. A lot of people would change the way they traded if they understood their own internal patterns, especially in regards to discomfort. What are the things that make you the most uncomfortable? Is it waiting? Is it the boredom of waiting for a trade to set up? Is it managing a winning trade? Is it taking a loss? Maybe it's a combination of all those things, but maybe there'll be certain situations, certain days where one is worse than the other for you, and maybe there's reasons for that have nothing to do with trading, things in your life that are going on. So it's really important to sort of, I guess what I'm saying here is self-awareness is kind of the broad path that you have to take, but that within that self-awareness path, it's really about understanding what it is that triggers you, what your patterns are, and when you start to see that, you'll start to see that those patterns are pretty, they're pretty repetitive. They're, just like we see patterns that repeat in the market, well, our own patterns internally repeat quite often as well. And so when you can get a handle on that, it's going to really it's going to serve you. It's going to go a long ways in your trading, the way you trade. And I would just like to see more traders do that. I know there's a lot of talk about, people talk about trading psychology. They talk about keeping journals. I would just encourage people to, if you're keeping a journal, I would really encourage you to include observations about yourself and your internal state as honestly as you can, and look for patterns. Okay, go back and review your journal, especially the part in your journal about how you were and what was going on with you, inside of you while you were trading. And see if you can get a sense on certain types of days, maybe on trend days or on non-trend days. I have certain kinds of feelings, or on these, you'll start to get a sense of, you can use yourself as a tell, basically what I'm saying, is many ways, in many ways that when you get good at this, you can really understand yourself. This kind of can become one way of becoming a more intuitive trader. There's a lot of different ways to do it, but this is one way, is understanding your patterns and using your emotions as information. And I really think that's something that's accessible to everybody, and I would really encourage everyone to give that a shot. So, Eddie, this is really kind of the formal part of the presentation, and I'm definitely, be ready to take some questions at any point if you guys have them, or I can talk more about this subject as well, because there's definitely more things I could say about it. But
well, how about if we do this, Doctor? How about we'll get to some questions if anything opens up, and we can direct it back if you want to add anything. I know we're about almost 25 minutes after the hour, but you mentioned discipline. Now that's one of the bases for success here. My question to you is, we've all had that discomfort zone. I mean, it's hot under the collar. Back when we were trading in the pits, that discomfort would build in such a high stress that, it was like, it wasn't healthy. Let's put it that way. And in this business, in this time of day, people are really looking to be healthy. A lot of these traders are always working out. They're eating well. Mentally and physically, you have to be prepped for that. Now, I've been in the rut. Okay, I have had the discomfort. I have had the hot flash. I have gone tunnel vision. This has all actually happened, being on the trading floor, being in a trade, position-wise. Now, human nature puts you in there. It's only part of being a human. Now, I know this is sort of cutting to the chase, but is there any, I'm not going to say a surefire fix, but something we can follow to get us out of that rut as soon as we, hit it? Trying to be the professionals that we are, we have to sort of turn on that sense of, we need to correct this, we need to fix this. If we do have that discomfort, if we're on losing trades, if we accidentally hit a button, on our software that, oh my God, I put a 15 lot on, or I didn't want to put a sale on there, I just sold 5, didn't want to. What's the best fix for that? What's the best fix professionally to get yourself back out of that discomfort, back on track?
Mm-hmm. Well, what you were describing, Eddie, kind of the more specific, the examples you gave, you've had a few losses, maybe you made a few mistakes, hit the wrong button, that kind of thing. I would say that in that kind of a situation, I think stepping away, maybe for the rest of the day or for an hour or two, not being in front of the market when you're in that state of mind, because it's likely that you're going to, the frustration could increase. Now, I understand people will say, well, you want to be persistent, you don't want to give up, and you want to push through. And I think that there's something to be said for that. And I understand, like in the world of sports and in many endeavors, that is usually the line of thinking. But in trading, it's different, because if you're forging ahead and pushing through and you're doing things that are not in your best interests, then you can really do a lot of damage. And not just financial damage, but psychological damage. You just increase the frustration. You can, sort of create a depression, a kind of a clinical depression for yourself. Not a good idea. So, I think stepping away. Now, stepping away could also be stepping away in not a literal sense, but in a figurative sense. For some people, maybe you have multiple positions on, and you can't really step away. And in that situation, what you could do is sort of a figurative step away, which would be do some breathing, do some long, slow, deep breathing while you're still in front of the market. Something to basically reset, recenter, regroup. Because if you continue to kind of swing the bat in that state of mind that you're in, spontaneously, certainly something could happen where you just kind of pop out of that state and you're feeling okay. That could happen. It does happen from time to time, but it's not likely that that's going to happen. Not likely. And it's a greater chance that you're going to, reduce the damage that you're doing if you take some type of a break, either, an actual literal break where you step away, or more of like a, figurative break and do some long, slow, deep breathing before you decide on what your next action is going to be, before you put on or take off another trade. So.
Right. All right. Thank you, Doctor. And at one point once, trading the S&Ps, there was it was a bad order went in. And, checking the order, found out that it was put in wrong, and the outcome was a big loser, like $16,000. Now, may I suggest, if anything comes about, if you're on the screen, all of a sudden you put a sale in or a buy in that you didn't want to put in, or to something to that effect, I found out just from trial and error, the best thing to do is get out of it right away. Don't try to play out of it. Don't try to trade out of it. Don't try to hope out of it. Just get out of it. If it's a loser, accept a loser. If it's a winner, wipe your brow and move on. But like you said, after that, then I would definitely take a step away, try to work my breathing. Breathing is such an important part here in this business, to keep the oxygen flowing, getting to your brain. You start holding your breath, the oxygen's going to cut out, and you're going to pass out.
Mm-hmm. Definitely.
All right, moving on. Makusan has a question for you, Doctor. Is it possible to have an emotional response to a trade if you are not attached to the outcome?
Is it possible to not have an emotional reaction to it? I'm not sure I understand the question.
Makusan, if you can give us a little more detail on that question, just type it in in the lounge, and we'll get to that. All right, Fred's got a question for you, Fred Decker.
Mm-hmm.
Lately, I've been thinking that my winning trades may be masking problems in my trading. My losers are straightforward. I take the trade and get stopped out. Winners are harder for me. I am uncomfortable. I have a million thoughts and feelings. If I get out of the trade too early, I feel good. I made money. How do I know if winning is masking problems?
Well, wow, that's a great question, Fred. You always ask great questions. In some ways, I'm going to just be really kind of, well, I don't want to say brutally honest, but I think sometimes winning can mask problems. But that may not be such a problem. It may not be such a bad thing in and of itself. And the reason I'm saying that is for a few reasons. But one reason I'm saying that is, as you said, being in a winning trade is difficult. But even if you just get out early, you still feel good. You locked in a profit. Now, yeah, that could be masking issues. But what I'm going to say is that if that is your biggest, if you're able to handle losing trades, and if, when you're supposed to get out, you don't hold them beyond where you should, and if you're someone who's not putting on many impulse trades, you're not becoming too aggressive, And if the only real issue is being able to hold on to a winning trade longer, what's really happening is there is something going on where you are, it's, for all of us on one level, it feels like when we're in a winning trade that whatever I do is going to be probably less than perfect. There's some level, at some point, there's this realization that whatever I do is going to be less than perfect. And so in some way, Fred, I don't know if this is what's happening for you, but by getting out early, in a way, you're kind of protecting yourself from that feeling of being less than perfect by deciding just to get out here and just sort of take matters into your own hands. And so, if that's like your primary issue, there's definitely things you can do about that. In fact, you should probably do, Fred, you can probably email me separately. We can kind of talk about this on email. But what I will say is that it's a common issue, what you described. It's very common. I would say probably about half or close to half of traders that have contacted me would say that is probably their primary issue, is being able to manage a winning trade. Really, it's like their biggest problem that they see. Really common. And again, if you can understand that when you're in that winning trade and it's not at the target yet, that you need to begin to see for yourself what kinds of feelings is it triggering for me? Where is this anxiety coming from? This is just one trade of many. It's one trade in my career. It's one trade of multiple trades today, perhaps. Why am I so anxious about this one trade? What is it about this one trade? And when we become really honest with that analysis, and we get good at that analysis, eventually we start to see that we have a choice in how we're going to respond to this one trade, that maybe we can possibly decide to respond to it differently than we have in the past. Maybe it means this time maybe I'll decide to hold it a little bit longer, perhaps, something like that. But anyways, shoot me an email, and we'll pick it up on email.
All right. Comments for Fred here. Sam is saying that one thing I noticed from journaling is when I'm confident in this trade, I take a note of that confidence, and when I doubt the trade, I'm in also. I take a note, but neither of those do I act if it's not part of my plan. It's just more mentally prepared for the outcome if it does not work out. Now, one thing we say here, Top Step Trader, in the mornings, I try to ask everybody, how's your mental state? How are you feeling? How's your emotions before we get into the day trade? Just a reality check to make sure that everybody is prepped. And this is something as far as being comfortable with your trade, with your feelings, going through your trades, and how much focus that you are putting out, how much effort you're putting out for your trade day. And if you're not at that level, that professional level, we talk about sports a lot. It's the pitching coach is going to come on that mound. He's going to say you're done for the day.
Mm-hmm. Yep.
All
Yep.
right.
You have to sort of recognize if you don't, a lot of traders, they have this feeling that they should be swinging the bat constantly all the time, and I understand where that comes from. I mean, we have a lot of people have a strong work ethic. Nothing wrong with that. That's a wonderful thing. Persistence in most endeavors really pays off, and persistence in trading pays off as well. I'm not saying it's definitely a good trait to have for a trader, but there's a time when we have to recognize when we should be backing off in our trading in that moment, because like I said earlier, you can end up doing a lot of damage. So not to say that you got to step away the whole day. Maybe it's just for 5 minutes. Maybe it's 10 minutes. Maybe you can sit there and watch, but you have to do something to sort of change the cycle that you're in. So.
Right. You almost have to be the second person to grab yourself by the collar and pull you out of that chair. And sometimes it gets tough.
Exactly.
Jay Preston's got a question. You work with some of the best traders in the world. Would you say that their trading is mechanical, discretionary, or intuitive? And what is the difference? Is there an order to the progression of a trader?
Yeah, wow, great question. Never been asked that one before. At least not that I can remember in a webinar. Let's see. Well, I would say the better traders that I've seen, ones that I've worked with, more on the discretionary, intuitive end of things rather than mechanical. probably definitely more even on the more intuitive side. In fact, I was just talking with a client yesterday. This is a guy who is a trader who's actually pretty well known in the trading world. He was, without saying who he is, he was in one of those lists back. I think it was Trader Monthly magazine before the magazine went under a few years ago. He was on one of their lists of like the top traders, top 30 under 30 traders, one of those lists, and very good trader, makes a lot of money. And we worked together several months ago, and he was transitioning from one firm to another, and was kind of concerned about that. And what was interesting is, we did some work together. He was doing fine, and then recently he got back in touch with me and said, "Hey, I want to re-engage and do some more stuff with you because I'm actually doing really well, and I want to maintain where I'm at right here." And so the reason I'm sharing this story with you is that one of the key differences that I see among really successful traders, not only are they kind of more on the discretionary intuitive side of things, and I'll speak to that in a minute too, is that they also, when things are going well, is they continue to work on themselves. They continue to work on themselves even when things are going well, as opposed to what you'll see in the struggling traders, because I get tons of emails from struggling traders, just random traders who I don't even know, just people who see my website and send me emails asking for advice. What I will see is that the common pattern, and I've known this also from talking to people, not just the random emails that I get, is that traders generally only want to or even consider working on themselves when things are not going well. But again, it's the better traders, the guys who are really, and the gals who are really good, who are consistently good. They're working on themselves pretty much all the time. Look at like Ray Dalio, right? One of the more successful hedge funds, and they're constantly, microscopically analyzing where they went wrong and trying to learn from their mistakes and working on self-development. And you'll see that pretty consistently with the top performers, is that they just don't let up working on themselves. And so that's just a really big thing. Let me just address another part of your question about mechanical, discretionary, intuitive, and where are the better traders. And I think the reason why I see more better traders in that kind of discretionary, intuitive end of the spectrum and not so much on the mechanical end is because when you're trading more mechanically, and I'm not dissing mechanical systems or anything like that. I think there's money to be made, and if you're doing well, then you should continue doing that. Don't want to take that away from anybody. But I think what happens is that in mechanical systems is that no one system works all the time. Markets go through cycles and rhythms, and what happens is if you're purely mechanical, there are going to be periods of time where you're going to just be in major drawdowns. Not to say that an intuitive or discretionary trader is not going to have drawdowns also, but if you're strictly mechanical, you're going to have drawdowns just by the very nature of being a mechanical trader, just by definition practically, because the market is not mechanical. The market changes. It's not mechanical. So the other reason too is that I've seen mechanical traders, what happens, unless you're like a black box, but if you're a mechanical trader who's really super, basically kind of like a discretionary trader, but who their trading is based upon rules, so that kind of mechanical, where you actually have to get yourself in and out of the trades, but they're based upon strict rules. That type of mechanical trader, I've also seen, they can do okay, but what happens is after an hour or two or three, a few hours of that, it's really exhausting, and people can do well for a period of time, and then all of a sudden they just, they can't control themselves anymore. And so I've seen traders who will do well mechanically for an hour or two, and then they just give it up after that. So answering your question, it's the better traders. In fact, it's interesting. I just remembered reading recently. I came across a quote by Ed Seykota, who was one of the market wizards, and I believe is one of the people considered to be one of the founders of automated trading systems. And he made a statement, and this is a guy who's a systems guy, systems trader, but he made a statement where he said that basically, if you have a really good intuitive trader, they will pretty much always outperform systems, only because systems are fixed and the market is never fixed. And I think he's right, and that's kind of why I think why that is the case. So hopefully I answered your question.
All right, thank you, Doctor. And Chief Flow's got a question. It seems that oftentimes when I've let my discipline lapse, it was out of boredom, not anger, just looking for some more excitement in my trading. Then bad trading decisions result in anger. But it started with boredom. What advice would you have for recognizing this pattern in advance?
So you started with boredom, and then you kind of moved on towards anger. So I would sort of say maybe try this. Get a piece of paper out and write down whether you want to kind of go vertical up and down or horizontal across from left to right. Write down some words. Maybe the first word would be like boredom, and then maybe the next word after that would be impatience, and maybe the next word after that would be anxiety, and then after that maybe frustration, and maybe after that anger. In other words, you have a spectrum, okay, where we're kind of filling in the gap from boredom to anger, right? We're kind of filling in that landscape, and then as you're trading, if you can pay attention to those words that are written along a spectrum and put a little hash mark, identify yourself where you are in that spectrum. And if you're anything, past one word, definitely two words past boredom on that spectrum, that should be a major red flag for you that highly likely, not for sure, but it's highly likely, or at least I should say, maybe not highly likely, but the odds are at least shifting more in the direction that you're going to engage in the kinds of behaviors that you engage in when you get angry. So if you can see it on a piece of paper for yourself, oh man, I'm moving from here to here. 5 minutes ago I was over there, and now I'm over here. If you can actually see that, oftentimes that can be a nice little reminder that you are now in a position, in a place, in a mental state where there's a much greater likelihood that you're going to, fall back into a pattern that you're going to regret later. And so having that paper in front of you, I think something like that is much more helpful than having a big Post-it note that says, "Don't be angry," or something like that, because you're going to get angry. You're going to be frustrated. So it's better to just recognize it when it's happening, and then if you're not in a trade, that's when you step away. Go for a run, go for a workout, do something physical, go do some meditation, go do some deep breathing, something like that. If you find that you're moving away from, you're getting into that anxiety, impatience, frustration area of the spectrum, major red flag. So think of grades of Shea. It's not just, from boredom to anger. Just kind of, make that scale more detailed. Fill in a lot of the gap in that scale, and sort of identify where you are while you're trading. I think it'll be very illuminating for you. All right.
All right, thank you, Doctor. Jay Preston is back with question number 2. Hypothetical question. If a trader were to have his or her emotion center of the brain removed, would he trade better? And what is a healthy relationship between emotion and judgment? Let's get to the first question here. He's snuck another one in there. But the emotional center of the brain removed, would he be a better trader?
Well, there's not just one center of the brain that's responsible for emotions, but to answer your question, he wouldn't even be able to trade because he wouldn't be able to make a decision. And what I mean by that is that in the last several years, neuroscience and the neurologists have discovered that the emotional areas of the brain become involved when we make a decision, any type of a decision. They discovered this as a little interesting quick story. Several years ago, there was a guy who was in a, he had suffered some brain damage from a brain lesion, and had surgery, everything seemed to be repaired, everything was fine, everything seemed to be okay, but yet he was having great difficulties making decisions, like some things as simple as what to wear in the morning. He was late for work, what to have for lunch. He couldn't, the most basic decisions, he couldn't decide. He was having a really hard time. And so the neurologists were mystified because they thought everything was back to normal in his brain. So they did some more brain scanning, and they discovered that what had happened was that certain emotional processing areas of his brain were still damaged. They hadn't noticed it before. but everything else was working. And so after that particular case, they started to notice other cases, and they began to see sort of a pattern where when emotional areas of the brain are damaged, then decision-making in general can sometimes be completely taken offline, where people can hardly even make a decision. So to answer your question, if you were to move the emotional areas of the brain, the answer to your question would be you wouldn't even be able to trade. Not that you would be a better trader or a worse trader. It would be hard to trade. The idea that our emotions are actually involved in our thinking is a very new concept. That the fact that we cannot separate our emotions from our rational process is a very new idea. I know many people who are hearing me say this probably don't believe it. Just like the old right brain versus left brain is another myth that brain science in the last several years has shown this is not true. In other words, they're not in opposition to each other. Right and left actually work in complementary fashions to each other. And so the idea that we can just sort of remove one area of the brain and then we'll be okay, and that's what's responsible for our problems, it's not that way. It's responsible for our problems in a way, but it's also responsible for our ability to make decisions also. So rather than just remove the emotions, what's better, what's more realistic, I should say, because it's not realistic, what's more realistic, more effective even, is to learn how your emotions work, how they influence your perception, how they influence your judgment, how they influence your behavior. That's a much better way, more effective, more realistic way. I mean, even if you could, let's say that removing the emotions were to make you a better trader. Let's say that was the case. How are we going to do that? You're going to go in for brain surgery and have that, have the amygdala and other hippocampus and other parts of your brain removed? That's not going to happen. So you're not going to be able to do it anyways. It's not, the reality isn't feasible, at least, in 2013. It's not going to happen. Maybe in years in the future it might, but not now. And so much better just to learn how to use your emotions as information to help you in your trading decisions. All right. Thank you, Doctor.
Back to Mako-san. This was the question earlier. Let me just sort of run up here and real quick. We got some time here. Now his question is one that we have to come back to. Is it possible to have emotional response to a trade if you're not attached to the outcome? Now, his second comment was, is it my experience that the source of emotional reactions are based on our attachments, as in to our account, to looking good, I want to be accepted, etc. What are Dr. M's thoughts on this perspective?
Well, I think that, first of all, I don't think, the idea that we're not emotionally attached to the outcome, I know myself, I've said things like, we should not be emotionally attached, and it's the emotional attachment causes problems, and I'm sure I've said that myself. The reality, though, is that on a certain level, we will always be emotionally attached anyways. The difference, though, is knowing that you're emotionally attached, knowing why you're emotionally attached, is actually one of the ways that we minimize the emotional reaction that comes as a result of that attachment, if that makes sense. So it's a little bit more subtle than people might realize. It's not so much about whether you're having, I would just say this: the attachment, the idea of attachment. Of course, we're going to be attached to the outcome of a trade, and I've always suggested we should not be. Ideally, we should not be. There's a lot of things we should be doing ideally, but recognizing that in reality there will be some level of attachment. Maybe we can decrease it, but there will still be some level of attachment because we're still going to be thinking about P&L and things like that, and our feelings about our P&L. Because there's going to be some level of attachment, there's also going to be some level of emotional reaction. There will be trades. There will be lots of trades, perhaps, that it feels like you're not having much of an emotional reaction because you're kind of in that flow state and things are going well. But nevertheless, there are still emotional reactions even if you're not realizing it. There's a lot of interesting research out there that shows that we can have emotional reactions even if we're not aware of them. In other words, I could easily have a biofeedback device set up on me, or I've seen it with traders, where it shows that they're actually having, there's a reaction even though you ask them, how are you feeling? Well, I feel the same way I felt a minute ago, but the biofeedback is showing that there's an increase in heart rate variability, or a decrease, which is one of the signs of an emotional reaction. So very often we can have an emotional reaction without even realizing that we're having one. And we don't realize it until later, until we kind of look back and say, oh boy, look what just happened. So hopefully that answered your question.
All right, thank you, Doctor. Auctioneer's got a question here. You speak of discomfort, all right, yet you also speak of intuitive trading. If a trade is intuitive, will this not reduce the discomfort?
If the trade is intuitive, will it not reduce the discomfort? Well, it may or may not. It sort of depends on you and sort of depends on the trade. It could. It very often does. I mean, if you really, and this is where we have to kind of get into, is it really intuitively driven, or was it driven more based upon kind of desire or fantasy or what you wanted to have happen? Because if it was really much more sort of intuitively driven, it's more likely that there will be, I will say potentially, less discomfort involved in those types of trades. Not guaranteed, but usually there will be a little less discomfort in those types of trades. And so, yeah, I mean, sort of answer your question, and I guess sort of yes, really, in many ways.
All right. I think that might be it for the questions here, Doctor. We do have some, let me just check here, just real quick, scroll down here. I think that's it. Guy has a question. Isn't emotions one of our indicators?
Yeah, definitely. Yeah, that's why we want to understand our emotions, analyze them, put words to them, understand why we're having the emotions, recognize I've had this emotion before. When did I have it before? What circumstances was it around? All of that is using emotion as information. So yes, emotions are information. I believe emotions are indicators, just like we have indicators. Some people trade with indicators on their charts. I don't, but think of emotions as indicators, that we have a huge tell. I mean, poker players understand this, right? They're looking around the table for emotions or emotional reactions and trying to, keep theirs covered up. And because they understand that it's a tell. So if you begin to see that for yourself, that your own emotions are a tell about what you may be doing or not doing, that's in your best interest or not in your best interest, really important part of trading is being able to read yourself, as important, if not more important, than being able to read the market.
All right, thank you, Doctor. There was a second part, or actually a third question that Jay Preston wanted to ask. We can touch on this. What is a healthy relationship between emotions and judgment?
Healthy relationship between emotions and judgment. Well, gosh, I'm not so sure I can answer that briefly, and I'm not going to even attempt to do that in a few minutes, but I'll just say that it's a complex area, and emotions are complex, and I would say perhaps just, simplistically, the way I would answer this question would be that to recognize that we'll never be perfect in our judgment, and so a nice, healthy relationship in terms of emotions in respect to that reality that we'll never be perfect in our judgment is to recognize that when we have strong emotions as a result of, maybe some poor judgment, to forgive ourselves and to have some compassion and to try and understand why we engaged in that. And that would be the healthy relationship between emotions and judgment that I would advocate for. So.
Right. I guess, coming into a trade, if you come into your day a good mood, a very good mood, and you have a bad trade here, I think it's going to be a little more lighter. on your burden on yourself, you'd be able to get around it a little better. It's like if a parent is in a good mood and the child says, Daddy, can we get a toy while we're at the store, a candy bar? And sure, go ahead, get it. And if the parent, or father, mother is in an angry mood and the child says, can I get a candy bar? No, you can't. It's sort of like, you can sort of tell the emotion with the reaction. So I guess you can handle, if you come into the day with a good mood, you can handle these bad trades a little better, and go about moving forward a little better too.
Mm-hmm. Very true. Very true. Yeah.
Now, Doctor, we've got a few minutes here, and what I always like to ask you, I'm waiting, I'm rubbing my hands slyly. I'm going to ask you for some homework, something that we can take home outside of trading to help us with discomfort. That was our topic here. Help us with family matters, mentally, physically, have us prepared.
Mm-hmm. Okay. Well, I will offer this for homework, and it's this homework. It may not be easy. It may be something that people don't want to do, but I'm going to offer it anyways as something as a challenge. And the homework is this: for you to think about, and then write out about some instances in your life when you were really uncomfortable, things that were not related to trading, things that made you really uncomfortable, and write about what the situation was and how you felt about it and how you dealt with it, how you responded to it, and really focus on the emotional experience. It's not so, the idea of this exercise, this homework, is not to kind of go back and microscopically examine what happened in terms of the event, but it's really, the purpose of it is for you to go back and be able to see that other experiences you've had in your life that made you uncomfortable, if you begin to see enough of those in your writing in terms of this assignment, if you're able to kind of go back and honestly look at those, what you will begin to see is that there will be some resemblance to the types of discomfort and the discomfort that you have in trading. And so to sort of make that connection. And so I would just sort of say that, and if you begin to see, you'll begin to see patterns. For a lot of people, when they do this exercise, I'll tell them, hey, write about, the three most difficult things you went through in your life, and sort of the emotional experience about those things. Very often people will begin to see a pattern between those three things, or maybe four things, or maybe they write about five things. But they'll often see a pattern, sort of an emotional theme, and that often, when they recognize that theme, it can be very eye-opening for them. And it can very often help us kind of look at our trading differently. So it's a tough assignment if you choose to do it, but it can be well worth it.
All right. Well, Doctor, I appreciate it. Very nice having you here on a Friday. I have been looking forward to sort of ending this week on a good note, and of course you are a page full of good notes. So, Doctor, wish you a very nice weekend, and thank you for your expertise. And until next time, we'll be talking to you.
All right. Thank you, Eddie. Take care, everyone.
All right. Take care. Bye-bye.